is Matthew Cratter from Trade University, and today I want to talk about how Bitcoin FOMO is coming, fear of missing out. I covered this in a video back in September of 2020. It's kind of fun to revisit it. I talk about how Bitcoin is currently at 11,000 and how a lot of people say that it's in a bubble, but that people are going to say it's in a mega bubble when it's at 30,000, and then how it's going to rush up to, it's going to hit its Plan B price target of $288,000, then hit $300,000. Everyone will rush in and buy, and it will crash down to $150,000. And people will talk about what a disaster Bitcoin is at $150,000. It looks like I was a little too conservative in my price targets. We got to 30,000. In fact, we got to 60,000 much faster than I ever would have guessed. But we are on track to hit my minimum price target for this year, as I've said many times, is $200,000 by the end of 2021. And we probably overshoot. We can see here that we're tracking quite well compared to the 2013 and 2017 bull markets. We are the red line right here. 2013 is the light blue line, and 2017 is the dark blue line. And so we're tracking well. Bitcoin has bounced off the 50-day moving average, and we're now encountering some resistance at 60,000, as you would expect. But this is a very, very good looking chart. We can see how Bitcoin has been holding up even as momentum stocks have been having a really tough time and struggling. So Bitcoin is really decoupling, which is exactly what we want to see. But what I really want to talk about in this video is all the fundamental news that is coming, and what this means is that Bitcoin wall of money just got bigger. What's headed toward Bitcoin? Morgan Stanley currently doing weekly calls to educate all their RIAs, all their wealth advisors on Bitcoin, estimated to launch in 2 to 3 weeks from now, and actually rolling out the ability to hold physical Bitcoin, not just paper Bitcoin, within their wealth management platform. This is absolutely huge, as Morgan Stanley is, I believe, the biggest wealth manager in the U.S. at this point. So we're 2 or 3 weeks out from that flood of money starting. Likewise, when one big Wall Street bank gets in on this, the rest have to follow or risk losing market share. Goldman Sachs will now also offer Bitcoin services to its private wealth management clients, including, and this is really good news, physical Bitcoin. So we're going to continue to see that demand for real Bitcoin, not just paper Bitcoin. We also saw yesterday that PayPal launched their crypto checkout service, which is mainly centered around Bitcoin. So they're rolling this out to U.S. consumers, and they'll be able to use millions of different. They'll be able to use Bitcoin to pay millions of different merchants. So anyone who's still telling you that you can't buy anything with Bitcoin, miss the news that you can now buy a Tesla with Bitcoin, and you will soon be able to buy basically anything with Bitcoin through PayPal. And so again, what this means is just more and more marketing for Bitcoin, more publicity for Bitcoin, and more people coming into the space. If you're finding this video helpful, I'd encourage you to hit that subscribe and like button, and also share the video with a couple of your friends. Also, we are heading into earnings season. Today is the last day of the first quarter, March 31st. And in the second quarter, in the next coming couple of weeks, we will begin to see earnings reports trickle in. And as Alistair Milne here points out, this is when any big firms that have been adding a material amount of Bitcoin to their treasury reserves will need to disclose it. So we could see news coming out that some of the big tech stocks, some of the FANG stocks even, have been buying Bitcoin, which would just be completely crazy. Once that happens, then you have all the S&P 500 companies really needing to get on board, and the money flows are huge. They will dwarf even the Morgan Stanley and the Goldman Sachs news. This is a great tweet from William Clementi talking about how miners were doing some selling back when Bitcoin was at 27,000 to 32,000. We can see here when it's red, it means the miners are selling. When it's green, it means the miners are hodling, or their inventories are going up. We've seen as the price has gone up, there's been a decrease in selling pressure. And a lot of people speculate that this is simply because they're now able to enter the debt markets, especially the publicly traded Bitcoin miners. They can issue equity, they can issue debt, they can use this to fund their operations. And as a result, they can hodl their Bitcoin. They don't need to sell it as much to pay for their electricity costs. As Clementi points out here, this also shows that they are quite bullish on, could show that they're quite bullish on Bitcoin as well. Great tweet here. People always wonder whether it makes sense to buy a little bit of Bitcoin or how to get in. I always talk about dollar cost averaging, but this really drives us home. This is an unbelievable statistic, and I have to assume it's correct. I haven't done the math. If you'd bought just $3 of Bitcoin a day instead of coffee for the last 6 years, you now have $350,000, which is going to double and double again and double again. So even very small amounts of Bitcoin, given its huge upside, can make a really huge difference in people's portfolios, people's lives. If you've missed out on Bitcoin, don't feel bad. Dave Portnoy has come out and said he was wrong about Bitcoin. He really loves Bitcoin. He wants to get back in. This is one reason that Bitcoin can't go down that much at this point in time. There are just so many dip buyers. There's so many people who missed out, who are willing to get back, who want to get back in, and they don't really know how to do it. This is why psychologically dollar cost averaging, buying just a little bit of Bitcoin every day, every week, every month, really makes a lot of sense because it provides you with that discipline. But even someone like Dave Portnoy is struggling with this. I personally don't think we see Bitcoin ever again below 50,000. So those of you who are waiting to buy it at 20,000 or 30,000 or 40,000, I just don't see that happening. I guess it's theoretically anything's possible with Bitcoin. We could see a flash crash and a spike down there, but I think it's increasingly unlikely simply because there's so many people who are going to have their limit orders in, just waiting for lower prices. And what that means is that the price cannot go down there. Another great tweet from Documenting Bitcoin. Bitcoin is very close. It's just, $200 billion away from being worth more than all of this silver in the world. Silver has a market cap of 1.3 trillion, obviously an industrial metal that's lost most of its monetary premium, and Bitcoin continues to grow. Silver has a lower stock to flow than gold. Gold has a lower stock to flow than Bitcoin, and this is why we see Bitcoin continuing to take market share and win the race. For those of you who have been following the Tether debate, it seems like whenever Bitcoin has a bull market, people come out and say it's just being pumped by Tether, which is unbacked, etc. I covered these old arguments in this video from January 8th, which I'll link to before, but we just learned that Tether is in fact fully backed. They've now had an audit and an assurance opinion from Morgan, which is a very old accounting firm, very conservative, presumably very reliable, saying that Tether is fully backed. Whether it is or not doesn't really matter. But this really takes away one of the talking points that Bitcoin bears have been using for a very, very long time, saying that Tether is just printed out of nowhere and that it's not backed and that this contributes to Bitcoin's pump. It's just not true, as we see now. And even if it were true, it wouldn't matter, as I do talk about. I go into a lot of the arguments in this video, which I'll link to below. As I said, talking about silver losing, Bitcoin catching up to silver's market share, we're continuing to see the exit out of gold, and it's really moving much faster than even I expected. I sold all my gold royalty stocks last year, exited gold, completely moved the money into Bitcoin, and we continue to see this. The younger generations are just not interested in gold at all. Here's Morning Brew. They've replaced their gold price in their market section with Bitcoin here, and this is just another sign of things to come. Unfortunately, gold has really underperformed and been a very poor hedge against money printing and central bank profligacy. As we can see, the money stock in the last year has really skyrocketed. This is the M2 money supply in the U.S. If you saw a chart like this, and you especially saw it going vertical as it has in the past in the past year, what would you expect the price of gold to do? You would definitely expect it to go up. It's been about a year since the Fed really started their quantitative easing, their money printing in earnest, and what has happened is since last year, the price of gold has gone off a cliff, and it really began to break down yesterday. We're testing these lows in the 1600s and 1500s. This is the gold ETF GLD. But what an ugly chart, especially when Bitcoin is performing so well. I ran across this article. It's a little bit old, but this is about a family from the South Pacific, from Polynesia, it looks like, who got out of all of their gold. They're definitely smarter than a lot of money managers. Traded all their gold for Bitcoin in 2017. If they're holding on to that, they're certainly done amazingly well since 2017, and as we've begun to hit new highs again. But this shows that even mom and pop retail investors in places that have traditionally really valued gold are figuring out the Bitcoin thing. It's much easier to store, it's much easier to verify, and to say it's much scarcer than gold. And it's much easier to send. I can't resist showing this tweet. This is how you send gold. This is how you send Bitcoin. Gold is an outdated money technology, and this is being priced into the market. This is why we see the price. The chart of Bitcoin looks like this, and the chart of gold looks like this. And these flows out of gold and into Bitcoin will really continue for the rest of our lives, I believe. Even Peter Schiff's son, I forgot to cover this when it happened. He has now moved. Peter Schiff's obviously a prominent gold bug who hates Bitcoin with all of his heart, soul, and mind. But his son is a Bitcoiner and has been slowly moving into Bitcoin. And as of March 11th, had moved 100% of his portfolio into Bitcoin, which must really gall his father and embarrass him. But all we can say is that there are definitely some smart genes in Peter Schiff's family. Peter Schiff's son must get this from his mother. So to summarize, Bitcoin FOMO is coming. We're getting ready for another leg up. We've just been sort of sideways here between 50,000 and 60,000. But with the news flow that's coming and the money flow that's coming from Morgan Stanley, Goldman Sachs, PayPal, as well as other corporations adding Bitcoin to their balance sheet, I'm really looking forward to the second quarter, especially as we see Bitcoin, as I said, decoupling from stocks showing some significant weakness, especially the more speculative names, and yet Bitcoin is holding so strong. You can only imagine when stocks turn back around again, when the Fed really ups its printing again, and momentum stocks come roaring back, Bitcoin, which has been showing relative strength, will go on an absolute tear. And this is one way that we get to $100,000 by the summer and $200,000 or above by December of this year, 2021. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.